Okay, a very good afternoon here on the 14th of August 2020. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, and the Traders Open Day. Welcome to the market update for the end of the week, 14th of August 2020. As you know, no official trading in terms of addition to our equity curve going on here at Master of the Markets in the month of August. We've often found that the month of August a little bit less volatility and not as much movement as other months in the year. So what I want to do today is teach a topic which is all about how you can get an early entry into trading opportunities. It's an idea that you can explore. It needs a little more substance around it in terms of thinking for the exact specifics. But what I want to do today is really give you an idea of a method of getting an earlier entry, maybe even a slightly tighter stop loss to increase the actual reward risk that you're going to acquire on trades moving forward. So let's take a look at a potential way in which we can do this. I want to do this using some real life examples in terms of what's happening in the market right here, right now. So yesterday in the live trading room, technically speaking, obviously, as I say, we're not actually taking trades at the moment, but there was a liftoff 3.2 setup here yesterday in the live trading room. And so if we were actually taking trade opportunities, we would be entering this market here on the high of this particular bar, and we'd be positioning a stop loss on the low just here. So this is a liftoff 3.0. This is a daily chart that I'm looking at the moment. You can see there's quite a distance between the entry and the stop loss. So what can I do in terms of getting a slightly better entry, a slightly better actual reward risk at the end of it, and getting more open equity from the actual trade opportunity? Well, let's look at one potential idea, and that idea is all around drilling down lower time frames into the hourly chart. So if we now look here at the hourly chart, we can see that the euro dollar here, for example, has pushed lower this morning. Hourly chart here, we've got this bar here, which is obviously an outsider bar. Now, if we get a confirmed swing low setting up on the 1 hour chart in the near future, i.e. over the next few bars, we see the arrow appear from the smart money indicator or any indicator you use to map out your swing highs and lows. It doesn't matter that the indicator is not the thing that's the focus of this training. What I want to demonstrate is if we look for a swing low to confirm here on the 1 hour, then what we can do is we can actually get an earlier entry and a slightly tighter entry into the trade, because what we can do on the 1 hour chart is we can actually position a protective stop here on the low of this bar. This is a method, and again, remember, it can't be used solely by itself. You have to combine it with other factors in your strategy as well. So 117.79 just here could be an initial stop loss, and your entry may go on the close of the bar, maybe that confirms the swing low. So let's say that this bar was to move higher over the next, let's say the next 2 hours were to continue moving higher, and eventually you got a confirmed swing low in the market. What we could do then is look at the close of that particular bar that confirmed the low, and what we could do then is we could actually enter on the close. So let me just put this blue line in here where that entry would actually be. It would be here. Now that, if we go back to our daily chart, that entry and stop, you can see, is much better than the entry and the stop that we would have acquired on the daily chart originally with the original version of the liftoff strategy setup. Let's take a look here, for example. So if on the low, 117.09, if on the low, let's say we go here, and again, so this is actually, what I'm going to do is I'm going to draw a thicker line in here for this stop loss line, because this is where our stop loss would have actually have been on our daily chart. Sorry, no, my mistake. Our stop loss would actually have been on the low of this particular bar just here on the daily chart. So this is the low here, 117.91, and here's the stop the entry would have been on the high of this bar, 118.63. 118.63 would have been our actual entry. So now, in fact, yeah, 118.64 is the high of this bar, so 69 would actually have been the entry, my mistake there. So 69. Now, let's take a look. This green line represents where we would get in on the hourly chart, and the thin red line represents where our initial stop would be on the hourly chart. The thick red line is representing where our stop is on the daily, and where blue line representing where our entry is on the daily. Now, if we go down onto the 1 hour chart, we'll actually see that the distance between entry and stop loss here is less than what we have here on the daily. Now, that can be a good and a bad thing. Remember, the good thing is, what I put in the title of the update is we're getting an earlier entry into the trade opportunity should we enter the market here. Now, the downside of this is obviously we don't have as much confirmation as breaking the high of the primary on the daily chart that the market is actually going to turn. In both cases, in both the 1 hour and the daily chart, on the daily chart, I'm looking to predict this turning point before it actually occurs. So you can see these turning points have already occurred here in the market prior. Now what I'm looking to do here with Liftoff 3.0 is predict this turning point before it actually occurs. Now the only way that can happen is obviously if the market were to move higher. And what we're doing now is we're going into the 1 hour chart. We're looking at a tighter entry. We're looking at a tighter stop loss than what we have on the daily at the moment, which is, let's put some numbers to this. This distance here is 47. And this distance here on the daily chart, entry to stop, is 78. Okay, so you can see that it's a much more tighter amount of risk, which means, technically speaking, if the trade does move in our favor eventually, then the actual reward risk we'll get from the trade will be much better than what we're requiring on the daily chart. Obviously, the downside, again, and I want to emphasize this as well because it's just as important, is that we're not getting as much confirmation that this will actually become a turning point than if we get a break of the daily chart. Our best case scenario is that we enter early on the 1 hour chart and the price continues to proceed up. It becomes a confirmed swing low on the daily chart as well. And at that point, we would have entered on the daily chart on the liftoff, but we actually obtained an earlier entry on the hourly chart. And that is much better for us because let's say that we set the target for the trade opportunity, and let's say that the target is going to be, 600 pips, which I believe is achieved 20% of the time. 20% of moves actually obtain, I believe, 600 pips. When we check the statistics to get the accurate figures on that, but which we all have here at Master of the Markets because that's our style of trading. 123.12 would be the profit target, which would be there at 600 pips if we were to use that target. Let's put that in the yellow line. So then you can see that the open equity actually that we achieve using the hourly entry is greater, 488. So that's one potential way that we can look at getting an earlier entry into the market. As I said, it does have pros and cons to it as well, so consider all the different factors before you factor it into a trading strategy, but it's certainly an idea. Let us know in the comments if there's any specific topic you'd like us to talk about, and remember to subscribe to our channel and like the videos as well. It really does help us out and encourage us to continue making great content for you guys, so we can keep putting this out there. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Bye for now.